This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple. Let's dive in.
Welcome back, everyone, to The Deep Dive. We're really glad you could join us again.
Great to be here.
This is The Deep Dive, brought to you by IUX Education. We believe that mastering trading isn't just about finding the perfect strategy. It's really about that deep self-awareness and, crucially, discipline.
Absolutely. It's often the part people underestimate the most.
Exactly. And today we're diving into a skill that, well, it genuinely separates the beginners from the pros who stick around. We're talking about how to know when to walk away for the day.
It's probably one of the toughest lessons, isn't it? Because the market's always there, tempting you, but knowing when you need to step back, that's key.
It really is, and that's why this is so relevant, whether you're actively trading, thinking about it, or even just interested in the kind of mental game involved.
It's not just tactics. It's about building something sustainable.
Right. We're going to unpack some insights, some real practical takeaways that might actually surprise you, helping you really get what matters when it comes to saying, okay, enough for today.
Because, let's face it, in this world of constant noise, endless charts, sometimes the smartest move is just hitting pause.
You hit the nail on the head there. Okay, let's get into it then. So let's kick things off with maybe the most objective signal, the undeniable reason to call it day, your predefined financial limits.
Yeah, this isn't about feelings or hunches.
No, none of that. It's pure numbers, and crucially, it has to be non-negotiable.
And what's fascinating here, I think, is that this discipline, it actually starts before you even think about placing a trade, before the market opens.
Right, when you're calm.
Exactly, when you're rational, thinking clearly, not, in the middle of some crazy rally or a sudden dip when emotions are running high.
So trying to set limits after a loss is pointless.
Pretty much. It's like closing the barn door after the horse is bolted, isn't it? That predefined part is where the real power lies.
Okay, so that makes sense. Let's break down the first specific limit then, the maximum daily loss.
Your absolute line in the sand for the day.
Right. This is a specific number, maybe a percentage, like say 1% or 2% of your capital, or maybe a fixed dollar amount.
Whatever you've decided beforehand.
And the moment you hit that number, boom, that's it. You're done. You walk away.
Period.
Even if 5 minutes later, what looks like the most perfect, unmissable trade setup pops up on your screen.
Especially then. Because hitting that limit isn't really a failure. If we connect this to the bigger picture, hitting this limit is your trading plan actively protecting you from yourself.
Like a circuit breaker.
Exactly like that. It's a loud signal saying, hold on, something's off.
Yeah.
Maybe the strategy isn't working today. Maybe the market's weird. Maybe your execution is sloppy.
Right.
Pushing past that point, hoping to make it back, that's when you slide from trading into, basically gambling. The rational brain switches off.
Okay, that's clear. Protect the downside. But now, here's where it gets really interesting. Maybe a bit counterintuitive for some.
I know where you're going with
The
this.
second financial limit, your realistic daily profit target. I can just hear people thinking, wait, what? Why would I stop trading when I'm winning? Isn't the goal to make as much as possible?
It feels like leaving money on the table, right?
Totally.
But this raises an important question, doesn't it? A really critical one. Are you trading just to trade, like for the action? Or are you trading to be consistently profitable and sustainable over the long run?
Okay, I see the distinction.
That profit target. It's your defense against greed. And just as importantly, against overconfidence, which can be just as dangerous.
How?
Well, imagine you've had a killer morning. You hit your target, maybe you're up, say, 3%. You feel great. But if you keep going...
You risk giving it back.
Precisely. You get a bit euphoric, maybe sloppy, start chasing smaller moves, maybe you're just getting tired. Locking in that planned profit means you executed successfully, day one.
You respect the plan, respect the market.
And respect yourself, your discipline.
So these predefined limits, the loss cap and the profit target, they're like guardrails. They keep you on the road.
Absolutely. They're objective navigators, a core pillar of disciplined trading, letting you control your actions instead of the market controlling you.
Right. So those objective hard numbers are crucial. We've got that. But now, let's pivot a bit. Shift from the external numbers to something internal and often way sneakier.
The emotional roller coaster.
Exactly, your emotional state. Because trading, let's be honest, it doesn't just risk your capital, it drains your mental energy, your emotional reserve.
Oh, definitely. It's exhausting sometimes.
And that fatigue or those strong emotions, they can seriously mess with your decision-making.
It's actually fascinating and a bit scary how quickly our own minds can become our biggest enemy in the market. Your brain goes from asset to liability fast.
Yeah.
And there are two emotional states in particular that pros learn to spot immediately, like big flashing warning signs saying stop.
Okay, let's hear them. I bet the first one is pretty common. Revenge trading.
Oh, the classic, a rite of passage almost.
Right. Have you ever had that feeling? You've taken maybe 2-3 losses in a row, and suddenly you feel this intense, like, burning urge to just make it back right now.
Yep. Feels almost physical, that urge. Your ego is screaming.
And what happens? You ditch the plan, right?
Mm-hmm.
Take bigger risks, start seeing patterns that, well, they aren't really there.
You're forcing it, just desperate to get back to even or into profit.
Yeah.
And if we connect this to the bigger picture, protecting your mindset from that frustration, that anger,
Yeah.
it's just as vital as protecting your cash, maybe more so.
Because your judgment goes out the window.
Completely. You're not analyzing anymore, you're just reacting emotionally. That's a clear, absolute signal. Shut it down, log off, walk away.
Clear your head?
Exactly. Hit the mental reset button. Preserve that clarity for another day.
Okay, so that's the danger of frustration. But then there's the other side, right? Which can feel good, but be just as bad.
The flip side. Euphoria after a big win.
You just nailed it. A huge winner. You feel like a genius, invincible.
Walking on air. Already planning how to spend the profits.
Totally. But that high, that euphoria, it leads straight to overconfidence, doesn't it?
It really can. You start thinking you can't lose. So the next trade, maybe you don't analyze it properly, ignore a few rules, pile on way too much risk.
Because you feel hot or lucky.
Yeah, untouchable. And this raises another important question you need to ask yourself. Is your success breeding more discipline, or is it breeding dangerous overconfidence?
That's a tough one to answer, honestly, sometimes.
It is. But acknowledging the win, maybe enjoying it for a moment and then walking away, that's crucial. Protects the profit, sure, but it also protects your humility, your discipline.
Keeps you grounded.
Because the market loves to humble people. Stepping back when you're on a high prevents that painful lesson. It reinforces the good habits that led to the win.
So, bottom line here, whether it's that burning anger from losses or that intoxicating high from a win, any extreme emotional state is basically a liability.
A huge liability.
And the professional knows that, knows when to stop to protect that mindset, because really, that's their most valuable asset.
Couldn't agree more. Your mental capital is everything.
Okay, so we've covered financial limits, we've covered emotional checks. Now let's hit the third big signal for walking away. And this one's interesting because sometimes it genuinely isn't you.
Ah, yes. Sometimes it's the market itself.
The external context, right? The conditions out there just change. And suddenly your brilliant strategy isn't so brilliant anymore, at least for now.
What's fascinating here is realizing that your edge, the thing that makes your strategy work, it isn't permanent. It's conditional. It depends on the environment.
So your strategy is designed for specific weather, so to speak.
Exactly. Maybe it loves high volatility. Maybe it needs strong trends. Maybe it thrives in quiet, range-bound markets. But when those specific conditions disappear or flip,
your edge vanishes.
Poof, gone. And trying to force a strategy in the wrong conditions, that just leads to frustration and losses. It's like being, an amazing surfer. But you find yourself standing in the middle of a desert. The skill is there, but the waves aren't.
That's a great analogy. Like if you're a trend follower, the market's trending beautifully, you're doing great, then bam, some big news hits, unexpected announcement.
And suddenly it's flat, choppy, unpredictable.
Your trend strategy just gets chewed up by whipsaws. Or maybe your strategy needs low volatility and suddenly the VIX explodes.
Right, and we see the impact constantly with extreme volatility or a complete lack thereof. Too much volatility. You get stopped out repeatedly by random noise.
Drains your account with tiny losses and fees.
Exactly. And too little volatility. Your trades just sit there, going nowhere, tying up capital.
So recognizing when the market conditions just don't fit your approach, that's maturity.
Absolutely. If we connect this to the bigger picture, recognizing my strategy isn't suited for this market today is a huge sign of trading maturity. It's about respecting what the market is, not what you wish it was.
It's not about having a crystal ball then.
Not at all.
It's about knowing your strategy inside out, knowing the conditions it needs to thrive.
And having the discipline to step back when those conditions just aren't there, admitting my hedge is gone for now. That takes real strength.
Yeah, I see that.
And this raises that final important question. Are you adapting to the market reality, or are you stubbornly trying to force the market to fit your plan?
Oof, that's a good one.
The professional choice, when conditions aren't right, is always step aside. Conserve capital, mental, and financial. Wait patiently.
Patience as a skill.
A very profitable one.
And there we have it, the 3 big signals telling you it's time to walk away.
Yep.
Those objective financial limits, your internal emotional state, and the external market conditions.
It really boils down to those 3.
And the key takeaway seems to be that walking away isn't weakness. Not at all. It's a declaration of professional discipline.
Exactly. It shows you are in control of your trading, not the other way around. The ultimate goal isn't just to trade all day, every day. Who wants that stress anyway? The goal is to be consistently profitable and, crucially, sustainable. Build something that lasts.
So by setting limits, checking your emotions, respecting the market, you're building that resilience.
You're building a career, not just gambling for a day.
So remember this, maybe the final thought to leave you with. Sometimes the most profitable trade you can possibly make is no trade at all.
Wise words.
Take a moment, maybe reflect on these ideas. Think about how you can apply them, not just if you're trading, but really in any area where you need discipline and self-awareness.
It applies broadly, for sure.
And if you want to dive deeper, explore more resources, find articles, learning materials, and of course, more deep dives like this one.
We got you covered.
You can find everything over at IUX Education. We're the team here, and we're supporting traders on their journey.
We hope this was helpful.
Absolutely. So until next time, thanks for joining us on the Deep Dive. Take care.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.